Okay, good morning, guys. So let's do the ES preview. We've already gone through NQ. So um, before I jump into where I want to trade today, I want to go over what worked well for us yesterday prior to me having to leave, and we'll go from there. So this was yesterday's chart. The plan was, remember that we were going to wait for, and let's clear out all the retraces. Okay. The plan was, first of all, we were going to wait for extension. We want to make sure that we didn't get run over an open drive higher. We recognize that the gap might not make an attempt to come in and fill. It was such a strong close prior day, and it was essentially gap and go, a little bit of delay on the go, right? So we got up into our key area where we expected resistance, which was either 1910, 1904, or 1901. We knew one of these three areas, this 10-point range, was where we wanted to look for a short. What do we do next? We waited for our swing short signal to trigger. We got that right here. Okay. Number two, we come up and this creates the trap point, right? The first time at 19, it was actually a little bit lower. It was this trap point right, gosh, it was this one right here. Ah. So originally the trap point was sitting right like that at 1905, right? We close below. This creates the trap. We get a quick 50-60 retrace. A push down. The first scale was plus 2 points. Now, it's very important if you're trading a small account or if you're trading a large account, getting the first scale is off because that lets you move to net break even or true break even and put money in your pocket. One of the areas where small accounts get frustrated is they try to go for the home run and they don't want to work their way up into small consistent trades that let them add a second contract. If you took your money at the first scale, which was I think I think our entry was 1904.50, our exit was 1902.50. You either got stopped at net break even or you got stopped out at true break even, one of the two. The trade then set up again, right? We pushed up a little bit higher. The trap now floated right up to here. We closed above on a 5-minute bar, closed below on a 5-minute bar. That triggered our swing short entry number 4. I took a 50-60 retrace entry on that. So what did I do? We really blow this up. Here's the bar. There's the bar that trapped. Here's the 50-60 retrace. I ran just in front of it at 1905.25. 1905.50 was the 50-60 retrace. And then what did I do? The exact same plan that I did before. I scaled my first at 2. Let me get rid of this. I don't know why I can't get rid of it. This is driving me absolutely crazy. There we go. Okay, first scale at 2. Next scale, I moved it up a tick, I think, to 1901 was the target. Wait, let's see, we came down 1905 and a quarter, 1903 and a quarter, 1901 and a quarter was the target. I moved it up a tick, took 1901.50, right? I had an emergency. I said that I was moving my stop to break even, which was 1905 and a quarter. But when we entered the trade, if you recall, the target was, where were the 50-60 retraces? Down here at 1890 through about 1885, depending on how you measured it, right? When we came down to 1891, that was a point in front of the 1890 original target I had. I took it off, I believe, at 1891.50 for 14 points on the second half of the trade. It never got stopped. And you had multiple opportunities to scale on the way down. This was a news event. I don't know what exactly happened there, but I know there's a news event. Quick flush. We also had a swing long generate. I was not here to post this. This is put up post-mortem, so it doesn't count towards the books. But the point is, this was the swing long. This was the trap back in to structure over here to the left, right? And then we went ahead, trapped back in, and took off to the other end of the range. Guys, if y'all will just, the guys with smaller accounts, so I can give you a simple formula in the room, so I get a pretty good sample of who makes money, who struggles, who's consistent. Consistently across the board, the guys who wait for 10-point stretches, the swing longs or swing shorts to trigger, and 50-60 retraces. those guys that are patient and wait for those entries are consistently stacking up chips in their account. The guys who are doing the worst, okay, and this is not for the guys I'm coaching, this is just a sample from guys in the room. The guys who do the worst in general are the ones who are trying to scalp their way through the entire day and try to find 5, 10, 15 trades that when the ranges get volatile and the market gets fast, it's close to impossible to keep your mind structured so that you can keep the right rotation size, entry, retrace order over and over and over again. That's my observation. I'm not saying it can't be done. I'm saying it's very clear from the feedback that I get from guys in the rooms. The ones who are taking 1 to 3, maybe 4 trades for the whole day, they're kicking ass. The ones who are taking 10 to 15 trades a day are in a constant boom bust cycle, which I plead with people to end for themselves. It's very hard. You can take a small account and make it a very large account. It's just difficult to do it in one day. If you take it slowly, your chips will stack up. Look for key areas. So that being said, let's look at what we're looking for today. It's 1 minute till the open, so I'm going to run over just a drop. Okay, obviously, it's high odds that we're going to either tag Globex high or Globex low. It's a big stretch either way, right? So looking from yesterday, the key for us, right, is first of all, is can we get below Wednesday's high to begin with? We're opening up, and we are currently plus. I have the NASDAQ up. NQ's up 10. Just a second here. ES is up 5. Okay. So first key is can we hold above Wednesday's high? Next, can we get a push back up towards Globex high? If we can, this open gap, this 1950 is still valid trade location. By the way, this 1914, 1916 is key area, right? This open gap is even more key if we push up into it. So the question is going to be is can we push up to the open gap? And if so, hold on 1 second here. And if so, if we can push up to this open gap, I would expect rejection. This is a little bit trickier because Globex high is so far behind here. I would like to take the short the first time into 1950. Normally I would put an 8-point stop, right? Instead I'm going to see if I can't get rejection out of here and a 50-60 retrace back to the upside. My concern is simply that it got run over overnight and they'll make a push up to the 1929.50 Globex high, and it'll just be not pretty on the upside. Hold on 1 second here. And that it'll just simply get run over all the way up there. I don't have a better way of handling it. Normally I would say no. You know, I would automatically take the open gap. Obviously, it looks like we might test this in the first 30 minutes, which would resolve the problem for me. I won't take it, right? First time to the Globex high, I will take a short and attempt to push back towards Wednesday's high. We've now extended tremendously, right? The retrace from yesterday's low to today's high will end the 50-60 retrace right at Globex low at 1902.25. I'd expect a response. That's also just below the gap fill. I would expect a responsive buy from here and or actually just behind the 62 retrace, not at the 62 retrace, right? Behind the 62 retrace, to be very clear. I would expect it to bounce actually right here. 1896 if we push below, right? And remember that 1896 to 1894 was a key area prior. It's kind of bumped up a little bit. It's already been retested. So the first question obviously is back here is will the 62 retrace? But the normal pattern is bounce off the 62 retrace, 50 retrace down to the 62, run the stops, then pop back up and make an attempt to get back above Globex high. The second trap, meaning the first time it closes below on a 5-minute bar, back above on a 5-minute bar, back below on a 5-minute bar, and then back above again, right? The second trap on Globex low, I would expect to trap in and make an attempt to the upside. right? But I'm waiting for that second trap. I will call it out if I see it. The next thing is I'm also looking for stretches. 20-point stretches have been key. So right now the high is 1917, 20 points down, puts us at 1907, which is right into 1907, 1897, which again puts us right behind this 62 retrace. Does everyone see that? So that's exactly what I'm looking to see if that will occur. If we can get that pushed down, I'm very interested in attempting a long from this area, first time in, particularly with any kind of tick divergence or swing long divergence, and I'll call it out. Okay, bigger picture. From this week's low, actually, instead of doing that here, let's do it like this. From this week's low to today's high, 1890, which we responded from yesterday, right? Followed by 1882.75. That's the 50-60 retrace. Unless we break a new high from here, please put that in your notes. I expect a response somewhere in this area. I expect a tradable response. Now, I understand that covers about 7 points of area, but again, we'll use the tools available to us to translate. Hold on. Okay, guys, so what I'm going to Okay, guys, this is what I'm going to do. I'm going to pause the meeting. I'm going to kill this meeting because too many people are having problems and start a new meeting. Okay, let's see if that'll fix the deal. Okay, give me just a second. I'm going to do that right now. I'll repost the link in just a second. Okay, so the first key I want to keep up with is, are we able to attain gap fill today, right? I'm not trading off of it, but I want to know, can we get gap fill? If we can't, or importantly, if we fall like 1 or 2 ticks shy of closing that gap, that is often read as very bullish, right? In other words, let's say the open gap's at 1903. I don't know exactly where it is, but 1903, I'll have to go pinpoint it. And we come to 1903.50, but we don't close that gap, that is read as bullish. I'd be cautious on shorting within 10 points of that response because that can just give us a slingshot back up to Globex high, right? Next question we have for the day, right? Before anyone gets too bearish. We cannot be bearish unless we get below yesterday's low, 1886.50, right? In order for anything to be a quote down market, we have to get both NQ and ES below prior day's low. That hasn't happened. I expect a response, and I will be a buyer at 1874.50. The way I've been playing the open gaps, because I think they're so important, is I've been reducing size and doubling my stop. In other words, normally I have a 4-point stop, full size. I've been cutting my size in half, but trying to push my open gaps significantly, okay? That 19.1950 has still not been closed on the RTH. I understand that we hit it in the overnight session. If we get a good stretch into it now, it'll be a 10-point stretch. I probably will take it first time in. Again, half size, 8-point stop. That'll be a net 4-point stop if I get tagged out on the 8 points straight away, right? But now that would be 1907 to 1919, 12-point rotation. I'm willing to take that, right? Next, at this open gap, this is where I'm very, very interested in taking my trade and waypoints along the way. First time into this 50 retrace at roughly 1889, 1890. This is where we had responsive buyers. I would expect responsive buyers again in that area. Not only is it a 50 retrace, it's also prior day's low. You'd have to suspect someone's going to step in. However, after that bounces, it would not shock me to see us come in and attempt that 62 retrace. The problem with the 62 retrace is we are unauctioned between yesterday's low and the open gap at 1874. The risk there is that instead of coming down, bouncing, and coming back up, is that we come down, consolidate here, and then re-auction through the open gap and then bounce. Be aware that that 62 retrace is higher risk. I want either divergence moving into that area or either on my swing indicator or take divergence to help me out to take a trade there. Okay. So additionally, if we get to 1906, by the time we get to 1874, that's roughly a 30-point rotation. I expect a response out of this area first time in. And if we get below 1870, I will break out the trade plan at that point. But I don't expect us to get down below 1875, 1870 today. And most importantly, I expect this to be the pattern. When people get bearish in the market, they keep expecting the market to do this, right? And now we've had a rip from hell, which is normal in a bear market to have huge squeezes to the upside, right? The place people get in trouble is they expect this day after day. This is usually the abnormal, not the normal. And if you look yesterday was just a balanced day. We closed at the top of balance, right? But this has been the pattern the majority of days that we've had. Push up. Sorry, let me get it so everyone can see it. The pattern has been push up, establish a high, push to a new high, push back in, push to a low, trap back in, push to the other end of the range. Some variation of this pattern has happened the gross majority of the last 3 weeks, okay? And I expect that to occur yet again today. And at any rate, I'll be exercising my 2 cents, and that's my 2 cents in terms of uh, um, uh, what I expect for today. On the upside, first time that open gap, I probably will take a shot at it. But remember, it's just not a naked shot. I'm looking for divergences, and I'll call them out in the tick and in the swing indicator. And just like yesterday, I'm expecting 20-point ranges. So I can hit 10 points with my trailers. It's important that you leave the trailers to get there. If you're a small account and you can't have the trailers, don't turn a winning trade into a losing trade. You're forced to bring your stop, generally speaking, in my opinion. If I had a small account, I bring my stop to break even and cross fingers, right? What happens to most small traders, by the way, is what they do is they leave the original stop once they attain the 2 points, right? And then they get pissed when it comes back up and stops them. I want to be clear with everybody, just so you know. This price behavior right here, where we come down, reverse, and then come back up and push to a new high, and then trap back in and go lower, this is normal, okay? We do it here, we come down, we set a new low, we try to push back in, we set a new low, trap back in, and then push to the other end of the range. End of the day, we obviously got squeezed up, right? This is the opposite of this, and this happens a lot on balanced days. I look for this pattern. It's not shocking when I see it. And just realize when this fails is when we're on trend days of one sort or another. As of now, we're not in any kind of trend day, so wouldn't worry about it. Looks like we're about to come in for gap fill, and we have econ that should have just come out. Okay, again, we have not hit the open gap or Globex high, and we are very close to Globex low at this point. Let's get rid of this here real quick. Okay, pointer. NQ below Globex low already. ES above. These markets are not matching up. NQ has been generally weaker than ES. NQ is also back underneath Tuesday's high, right? We broke above, fell back below, closed back above. If NQ cannot get back above Tuesday's high, I would expect failure on ES at Globex low. NQ leads the market, guys. Generally speaking, doesn't have to. Played catch up yesterday morning, but generally speaking, it does. It's very hard for the market to sustain an upside move without participation from NQ. Also, immediately we recognize that we do not have a market that's in sync. This is sending warning signals again. So just be aware. I would check IBB, by the way, for a push lower. I do not think we're back in a bull market. I do not expect the market just to continue ramping to the upside. I expect a sing-song type of pattern to emerge, but this has me concerned. So let's put it like this. Prior days. Note that that is, make whatever type of note you need to make there, but that is, here I'll set it like this. That is Tuesday's high. And if we cannot get back on a backside test above Tuesday's high, I would expect us to roll to the downside to test yesterday's low and then the open gap below. Okay. And be aware 60 down brings us still to 40.94.50. Okay. And that would get us back into yesterday's range. And by the way, even on ES, we just came off of what was the AM high. And we're trying to push and hold above that, okay? If by 9 a.m. we can't get above 41.44, I would expect a roll to the downside. And then again, 1890, 1885 area and 1880, look for responsive buyers down there. First time into those areas for scalps. And then I will call out when I have the swing indicators. So that's all I got. I'm gonna take a 10-minute break. Please follow your trading rules, follow your stops. There's good trades out there to be had. It's easiest if you let the first 30 minutes go. That's the easiest way to get paid without getting destroyed. And by the way, Ron points out Apple's getting crucified this morning. Just be aware of that. And just let the day develop, right? NQ being weak is not a great sign for us to start out the day. Anyways, I'll be back in just a minute, guys.